Chalo. So till yesterday, we were discussing about the your Caro, and we had completed up to clause number 9. So we will have a quick recap of what all the clauses we have said, read. The first thing is we are talking about the reporting duties of an auditor. So in the reporting duties, we spoke about section 143 inquiry, okay, signing of the report, giving reasons, reporting certain additional matters. So all those things we had discussed. Okay, so the last one was your CARO requirement. So what was my first para? First para was all related to your fixed assets. So what is that you wanted? Investors wanted to know about the fixed assets. Okay, first thing, FA register. It should have been accounted. Second, physically verified. Then valuations, discrepancy of more than 10%. Then Benami. These are all the keywords. Huh? This way you can try to remember. Okay, very important elements of it. And if it's title deeds, very important. I told you, no, among all title deeds is very important because they have given you one table in which you will have to disclose, like what is the name of the property, what is the value, whose name it is held, how they are related. At least four things to basic, and a period held. If you tell this much, finish. Okay, maybe 2 to 3 marks you may secure. Okay, so revaluations. Yeah, these are all the 5 elements you wanted to know. Then second para is related to inventory. See, inventory to record will be there. Only thing is physical verification and that 10% criteria. That inventory could have been sanctioned. Working capital loan. This could be the another issue you wanted to know. Yes, so these are all the only two things you wanted to report about the inventory. Then coming back to the loans and advance. Okay, so you wanted to know how much you have given to subsidiaries, joint venture, etc. Then how much you have given to other parties. Is there any prejudice? Prejudice means harm in any of the loans or advances you have given. How? Yeah, you are not telling the terms and conditions. You are not telling the repayment. Okay, so this is what you would have been done. So first of all, somebody wants to know what loans and advances have been given, to whom it has been given. Okay, so these two elements will address that. Then somebody wants to know, okay, you have given a loan, but is it in our interest, or are you trying to make somebody else to benefit out of these loans and advance? Okay, then you wanted to know overdue. Is there anything is overdue? And what is my criteria? 90 days. How to remember? Simple. NPA norm of your bank. Okay. Then again, similar to since you talk about a bank, is there any renewal happen? That means did you give fresh loan to repay the old loan? And the last one is repayable on demand. Demand loan. Okay. So without specifying the terms and conditions. Have you told? It is also very easy, students, to remember. If you summarize, no, and I hope you must be doing this mind map. Yeah, students. See, first of all, 4 chapters we have done that mind map, and I hope you understood how to do it. So going forward, I want you to take up that exercise. Okay, I will also give you guidelines and all. I will also I'm trying to use AIs and all for doing this mind map. Let me see what I can share with you. But at least see, look at this. You need not look at the study material again right now. Means this is something you need to be remembering from time to time. Okay, FA will have these 5 elements. Inventory will have these 2 elements. Loans and advances will have these 6 elements. And now, when you look at this as a summary, you remember better. Then, clause number 4, section 185 and 186. Okay, primarily loans and intercompany investments. Second layer. Then deposits. I told you there is nothing much. You have to comply with the law and all, RBI guidelines. Then you have got cost records. You need to see whether cost records are maintained. Statutory dues. Okay, so primarily we have got overdue more than 6 months from the date it is payable and due as on 31st March. and dispute it with the forum. Easy. Okay. Then you have got unrecorded transaction. Okay, so is there, have you done any unrecorded transaction? And now you have got a loan default in loan. Okay, the first thing is the nature. Okay, the details of the default. This is important because they have given one table. First of all, somebody would like to, if you have defaulted, they want to know which type of loan you defaulted. It's called the nature of the loan. Now, who is that person to whom it is defaulted? You wanted to know that. Amount is something what you want to know. Okay, and the amount is principal is how much, interest is how much, that component, and outstanding number of days. You see, student, this is a very basic requirement. Anybody would be wish to know about it. You don't need to memorize actually. You can simply ask one some common sense question. Okay, if somebody has defaulted, your relatives only will tell, or that person has defaulted the loan. Then you start asking question, which bank? Because you, depending on the banks will take action now. If it is private bank, no, their gundas will come and sit in front of your house. Okay, then how much is the amount? Okay, so from when it is due. So these are all the things you will be giving disclosures. Now, second is willful defaulter. Is it willful defaulting? This is what you are going to write. Okay, is there any diversion of the loan? That's why, that means if you are diverted, that means your intentions are very clear from the day one. You didn't want to use it for the purpose for which you took it. You wanted to take it somewhere else. So that means, see, everything goes around the default. So first is the basic thing, default. Then was it willful? Have you diverted it? Because this itself gives an indication that yes, you had a different intention only at the beginning. Then short-term, long-term loan utilization. Have you interchanged it? This is the risk you are taking. Okay, then have you taken it from loan for subsidiary and loan or pledge of subsidiary assets? That's it. These are all the only things you need to be knowing about default in the loans and details. So this is important. This is important. Okay, so now we will proceed further. IPO and FPO. Now, what is that you wanted to know about IPO and FPO? Again, Sahara case. Because people see you are this guy, this person today, PwC. Okay, your price, this physics wala, PW. They have come with an IPO. They have told that this is the money we are going to utilize for this 600 crore will you spend on marketing. Now somebody wants to know, okay, is there money has been properly utilized? See, whether where you diverted the loan, we have seen here. But what if the money is raised through IPO? There is no question of default. So this is not going to become applicable because you are not going to refund that money. But somebody a willful defaulter, this is also not applicable. Okay, so this becomes applicable. And if you are raised money through IPO, it is long term only. So this is also not applicable. And you need not take this. Okay, this can be the purpose, and this you need not pledge anything when you are raising IPO or FPO. Okay, so primarily, when the money has been raised by way of initial public offer or subsequent public offer during the year, were applied for the purpose for which it has been raised. And if you have done the delays or default in utilization, that you have to be reported. Okay, so this is nothing but the same like a loan. And now company has made any preferential allotment or private placement. This is the Sahara case. This is what they did. They said we have taken the approval of the company, but actually 24,000 people if you have allotted and raised, not 24,000, around some 17,000 people it has been allotted. 24,000 crore has been raised. Now tell me 17,000 people, how it is going to become private placement? Okay, this is what somebody wants to know. Have you done any preferential allotment to someone like CEO? Private placements have you done? Have you complied with the Companies Act provisions? And the funds raised have been used for the purpose for which it has been raised. Okay, no, then you have to report the non-compliance. Easy, very easy. That's why this is this particular portion. Now, fraud. Already we have discussed whether any fraud by the company or on the company has been noticed. So when you talk about section 143 subsection 12, it is noticed or suspected by the company. Who is this by the company? By the employees of the company. But here you have to report about the fact on the company also. That means if a creditor has done a fraud against the company, if some third party has done, that also has to be reported. But it is only noticed and reported and not suspected. This is what you need to understand. Okay, and which type of frauds are covered by you? You are covering only fraudulent financial statement and asset misappropriation. That certain things like your fraud, like your corruption, your stealing of the sensitive data, since these things won't be reflecting in the financial statement, you will not be talking about such items. If yes, the nature of the amount involved has to be indicated. Okay, first thing, what type of fraud you noticed or reported. Then you need to tell, is there any report under section 143(12) you have given to ADT4 to the government, that means fraud more than 1 crore. Now, if you would have suspected any fraud, that information you would have given to the central government. Okay, that you are going to tell here, look, we are suspecting, this is noticed, but this is suspected and reported. Whether the auditor has considered the whistleblower complaints received during the year. Fantastic students, whistleblower complaints. Now, what happens? I'll tell you. See, because of the corporate structure and so and so, so and so, people know that some frauds are happening, but they don't have a gut to go and tell, because maybe the top people only must be doing the fraud. So that's why there's the concept of a whistleblower. Very fantastic thing. Okay, and you see, read the newspaper. Now, lot of time you come across that. Okay, the police did the raid here and took some weapons. They took that wild animal thing. So many places. No, every news when you read, they say khachita mahiti adharadalli. That means some information they receive. Now, how they get? They have set up their own information system. Please understand. From the time of king, no, that intelligence has been spread. Even every police officer in their respective, they have got kabris. Okay, they have set up. We don't know. Maybe our neighbor itself is a kabri. Okay, who is giving information to the police. Okay, no, I need not be a kabri, but if I see that something is going wrong, I don't want to come forward. But I don't like that certain fraud happening in front of my eyes. See, later we will learn something called a no clap. Okay, that is different, which we have to report as per in professional ethics we'll learn. Okay, now what I'm trying to tell here is the companies have designed one mechanism. They said, look, if you have figured out a fraud, first of all, the board of directors have floated something called a whistleblower, and they have to give a sufficient publicity also. Now, if anybody gives any complaint, first thing, their identity is anonymous. Nobody will come to know who has sent the mail. Their identity will never be disclosed. Okay, first from one side, you are happy that you will not be identified now. Otherwise, what happens now? If you have complained, tomorrow you can be that target. They can blame you. Second element, the complaint what you have given will straight away go to the top board of directors, plus or audit committee, whatever. Okay, who has to open that and see? Companies Act is going to tell. Now, auditor has been given one responsibility to go and check this whistleblower. That is what he has to report. Now, why? Because if the frauds are happening, at least see, whistleblower somebody would have told. And what auditor can take? Auditor can inform to central government, because this can be the fraud happening at the board of directors level. Okay, so he can inform to the audit committee. See, this mechanism has been set. That's why you don't see much frauds today happening, because they are well controlled at a system level. Okay, so and one more thing, I want to share my personal experience also. There was one fraud happened in my sister's account. She was an insurance agent, and somebody had used her insurance ID to sell the insurance. And one day she got an income tax notice that 8 lakh rupees is the TDS done. He got surprised. 8 lakhs TDS, that means how much business must have been done. And when we investigated, we found that there was one account opened, okay, in her name. But she didn't know. She told, I never did it. And what happened now? That the photo was of somebody else only. Now we went to the bank manager. Bank manager is asking for an FIR. Okay, he is not willing to give the details and all. Now FIR to file, okay, we could have gone ahead and filed, but we wanted to know who was there behind the picture, like how it happened. Okay, because we suspected. Okay, then what I did, what I did, no, because bank is not willing to give. Okay, they are telling tomorrow, day after tomorrow we'll give, and like FIR is required. This type of delay was happening. Then I sent a mail to that bank's whistleblower policy. I sent a personal mail I have sent telling this type of incidents have happened. See, we can just go and give, but tomorrow your bank's name also will come there. And next time I got a call from that bank manager and he gave me every detail. Like what is the who opened the account. Okay, gave me the document of like account opening application. Then I realized, friends, see, this whistleblower is so much effective. If anybody down the level, okay, if you suspect some fraud is happening or whatever, or any complaints are there, you can just talk to this whistleblower, you get effective remedy. One more instance happened, just to share you, because maybe you also may get benefited out of it. I got shares in 2010 in Vedanta. Then actually I forgot it. In 2023, means I knew that there was shares, there was some TDS has been deducted from my account. In 2023, I was trying to get my all the statements and all, like where is my asset, what all things are lying. So then I knew that there was a share, so I contacted my company. Company didn't told that we don't know anything. Then they told you refer to the old company. That also nothing happened. You see, student. Then what I did, some friends suggested me in the website. No, they have got some investor relationship committee, and they would have given one investor relationship some ID. First of all, I had lost every hopes. What? Because nobody is aware now. Now who will trace my shares now? Then I just sent them mail with my detail. This is my employee ID. This was this. This is the data. I got a so surprised that I got a mail from them, and I understood that my shares are not sitting at a local level. Since ours is Vedanta PLC, a UK based company, my shares are there in UK. Then I got a reply from them. Then they told me the method. Then okay, I wanted to withdraw that. I wanted to sell the shares and get the money. But somewhere 1.3 lakhs I got. Okay, I thanked to that email ID. Otherwise, I would have missed it. I thank to this email ID because please we have to understand and we have to believe some systems what is working today, because these are all addressed by the top people. So you have to check the whistleblower complaints received during the year. Okay, now let us see some questions. Caro question number 1. Whether any fraud by the company or any fraud on the company have been noticed or reported during the year. If yes, nature and amount to be involved. Explain this requirement and the audit procedure. See, this is something different. In the chapter number 5, they have given as a question. What audit procedures you need to follow? Okay. So first of all, the responsibilities have been widened. The clause do not require auditor to discover such frauds, and you can bring a guidance note on the fraud also, section 143.12, and you have to explain like what type of frauds are there. Like there are certain frauds which do not have direct effect on the financial statement, that you can also explain. The management of the company should have knowledge about the frauds, and it may be noted that this clause of the order does not relieve auditor from his responsibility to consider fraud in the error of financial statement. It does not relieve. That means you have got that responsibility casted by say 200 or 240 to do fraud risk analysis. Now fraud is an intentional act. Now auditor is concerned with the fraudulent acts, a material misstatement in the financial statement. You do not make the legal determination. So fraud involving one or more people in the board is called a management fraud or fraudulent financial statement. And if it's employed, then it's called employee fraud. Now, generally speaking, management fraud can be considered as a fraud by the company, while committed by the employee or the third party can be called as a fraud on the company. Now we are in a better position to understand what exactly they mean to say. So this is all coming from the guidance note. The fraud by the company means we have to consider only top management. On the company means done by the employee, the asset misappropriation. So by the company's fraudulent financial statement. On the company's asset misappropriation. The auditor shall report separately on the company and by the company. Two types of misstatements are relevant: the financial reporting and asset misappropriation. That's the corruption they didn't speak. Fraudulent financial reporting, they explained like how it is going to happen, deception, misrepresentation, which we have already learned in 240. Asset misappropriation happens by theft of the entity's assets, or we have already seen that um, using of the assets for the personal purpose and so and so. Okay, so now the first part talks about what do you mean by fraud on the company and fraud by the company, and what is auditor's responsibility? Is he supposed to figure out, or who is responsible for this fraud? The second part of the question talks about the reporting procedures. First, auditor should discuss with the members of the audit team. 240 also starts with the same engagement team. Make inquiries of the management, risk assessment procedure. Examine the reports of internal auditor, risk assessment procedure, and examine the minutes of the audit committee and the meeting. Obtain a written representation from the management, again covered in 240, that it has acknowledged its responsibility to establish the internal control. Effect of uncorrected misstatements are not material. Disclosed all the significant related frauds, facts related to the fraud, and disclosed its results of the assessment, because they also must have done the fraud risk assessment because they are responsible. This is also covered in 240. And auditor shall consider, has it been anything reported in section 143.12? And it goes like this: if a cost auditor has identified a fraud, then also you should report. But if the cost auditor has reported, you should not report this, because same item shall not get reported twice with the government. So if somebody else has figured out, no problem, you should report it. Government should be made to be aware. But government don't want two people to report on the same. Okay, so this is one consideration you need to have. And all the frauds noticed or reported during the year shall be reported. Only noticed fraud and not suspected fraud. While reporting under the clause, consider the principles of materiality also. That means a small amount and all from 250 rupees somebody has stolen. Okay, don't report in the cap. Consider the materiality. So is it not easy, students? Okay, first thing they spoke about in this question, what is fraud? What exactly fraud it is? What type of frauds are covered? They can ask you any case-based questions on this. Second, what type of procedures you will follow to report it? 240 is the best guidance. So once you read it, yes, you remember now. Okay, you have to take a representation, you have to make an inquiry, you need to discuss with the team, and what type of frauds only report. And if it's already reported by somebody, you need not report. Now, what are the reporting requirements for audit of under CARO? Fraud has been committed against the company by the officer of the company. Okay, you need to report it because it's called a fraud on the company. Committed against the company by a vendor of the company. This also has to be reported. This is on the company. Company has committed a major fraud on its customers and the pending in case of the court. Okay, this is fraud by the company. A fraud has been reported in the cost audit report, not noticed by the statutory auditor. Then this also has to be reported. Okay, because if it is reported fraud, you have to give it to the cap. But central government has to be reported in ADT4 or audit committee. Now, reporting under the CARO, first you explain what is clause number 11A, that fraud has to be noticed or reported, and anything which is reported under section 143 has to be given, and whistleblower complaint has to be verified. So, fraud against the company by an officer has to be reported, by a vendor has to be reported. Suspected fraud by the vendors, customers, etc. should be dealt as per SA 240. The company has committed a fraud on its customer has to be reported. Fraud is reported by the cost auditor. Okay. So, but not noticed by the statutory auditor. So, as per clause number 11, all frauds noticed or reported during the year shall be reported, indicating the nature and amount involved, specified the fraud by the company or its officers or employees are only covered. Here, in the given scenario, fraud has been reported in the cost audit report, but not noticed by the statutory auditor in his report. Hence, statutory auditor has to report the nature and the amount involved in the audit report as per section 143 of the Companies Act. So, you have to report it. And the statutory auditor has to report the nature. Okay, he has to. So, everywhere he has to be reported, only suspicion should not be reported. This is the catch. Okay, this is one of the nice questions. They can ask you questions like this. Already marked it as a priority. Yes, next is the Nidhi company. Now, whether the Nidhi is like a chit funds type of company where small amount will be collected. Have they complied with the net owned funds to the deposit ratio of 1:20? That means if 20 is the deposit what you collect, 1 should be your net owned funds in order to meet the liability. Okay, this is like more like a liquidity ratio. You need to have at least one of your own capital against 20 what you collect. You need to check whether they have complied, whether they are maintaining 10% of the unencumbered term deposits to meet the liability. Okay, what is this unencumbered? See, this is their net worth versus their liability, equity versus debt equity ratio, I can say, because your deposits are more like a debt, net owned funds is more like a equity. So first they talk about the debt equity ratio. Now this is like we have got the cash reserve ratio. No, this is 10% is like a cash reserve ratio. Now what is unencumbered term deposit? Unencumbered term deposits will go like this. Now this is the bank, this is the customer, he has come and kept one FD. Okay, this FD is a liability for a bank, say rupees 10 lakhs. Now, after some time, he is in an urgent need of money. Now, he doesn't have any other asset. So, he will come to the bank to take a loan, but bank will ask, where is your security? He says, sir, take your FD only as a security and give me loan against my own FD. You give me 80% of this value, 8 lakhs. Now, this is a secured loan because you are giving loan against your FD only. The moment you give loan against your own FD, that is called encumbered. I hope you are clear. Encumbered term deposits. That means, first of all, this is one term deposit. You have kept it for say 5 years. And now you are taking a loan against your term deposit. This is called encumbered term deposit. If another person comes and keeps one FD of say 8 lakh or 20 lakhs, but he has not taken a loan against that FD, he has not pledged with the same bank. Now, he might have pledged it with some other bank. That is a different story. But for this bank, this FD certificate is unencumbered. Are you clear about this? Now, tell me, student, tomorrow if this person comes and says, give me my FD, what banks will say? First you repay the loan, then only I will give the FD. That means I am actually need not worry about the liquidity about this FD because it is already encumbered. Loan has been already given against that FD. But my biggest worry is, what if this person comes tomorrow and say, give my FD back and say, pay me 20 lakh rupees right now. So, like this, anybody can come and ask their FD back because premature termination of the FD can happen. So, what should I do? I should maintain 10% of this FD, not this FD, as a reserve in my bank, in my hand always, because anybody can come. If I reject anyone now, then domino effect is going to happen. They will lose the trust on my bank. Every customer will come and try to withdraw the money. So I have to check whether that 10% of the unencumbered term deposits have been kept as a liability, whether there is any default in payment of the interest on the deposits or repayment of the principal. This is what you need to see. Nidhi company. Nidhi means what? Small deposit they accept. First of all, this is the debt equity ratio they need to have, 10% cash reserve ratio they need to have, and they should not have defaulted anything. Very easy to remember. Next, clause number 13, whether any related party transaction, leave it. Section 177 and 188 of the Companies Act have been complied. What is that? Taking of the audit committee approval, passing of this resolution, all those things, okay, which they didn't discuss here. So leave it. Next comes clause number 14, whether the internal auditor, okay, internal audit related, whether the company has got an internal audit system, because section 138 mandates certain types of companies, which we'll see later, to have an internal audit. Now, for the namesake, they can appoint some internal auditors. Okay? No, auditor has to verify whether the internal audit system which has been created is in commensurate with the size and the nature of the business. Simply for the namesake, you don't create one internal audit department because section 138 wants. You need to have really a very strong system of internal audit because this could have prevented so many frauds and errors. You see, friends, all are cash related risk. Every single point is a cash related risk. Somewhere government want to address that, bring it to the notice of the people. And whether the reports of the internal auditors were considered by the statutory auditors, that means they issue the internal audit report. Have you considered what they have reported there? Have they reported any fraud, error, okay, system failure, internal control weakness? Have you considered it? This is what you need to tell. Now, Do you want to rely on the work of them? That is different story. That communication happens with the TCWG. That you need not tell the your external audit, investors, because ultimately you are taking responsibility for relying upon the work of internal auditor. Here, your external investors want to know: is my internal control system is strong enough, and is the auditor considered their internal audit reports? Okay, because you bring one independent touch. What can happen? No, whatever weakness you notice, this is one internal reporting. Board of directors may disagree. They may keep it aside. Probably audit committee may not be there in that organization. But at least an external audit, independent auditor is going to glance. No, he will see what all the weaknesses are there. Then he would have taken an action. That's why he is trusted now. Government want him to go through that internal auditor's report. See, one more control. Non-cash transaction with the director. So again, if any non-cash transaction has happened with the director, provisions of section 192 have been complied with. Ignore it. They didn't discuss what is section 192. So section 192 goes with like non-cash transaction like this, where it is an arrangement where director acquires the assets from the company other than cash, or an company acquires the assets from the director other than cash. That means through a barter. That means director will give his plot of land and he will get the, say, shares of the company, or some other land he will get. Okay, so this is what you need to check. Okay, let us see now next question on clause number 15. Okay, so non-cash. Yes, they had not discussed anything here, but if you see, there is a Caro question number 2, an RTP and test your knowledge question. So this becomes important now. Whether the company has entered into any non-cash transactions with the directors or the persons connected to them, have you complied with section 192? What is your requirement as per requirements of Caro and the audit procedure? Two elements. First, what it is, and second, how do you verify it? Okay. Now section 192 talks about deals with the restrictions on non-cash transactions involving the directors. It prohibits the company entering into certain arrangements. Now, an arrangement by which a director is of its company, holding, or subsidiary, or any person acquires assets for consideration other than cash, or company acquires assets from such persons other than cash. This is what it is, section 192. Now, arrangement discussed in the section 192 can be entered by the company only on fulfillment of certain conditions. Now, first of all, can such type of barter system can happen, where the company can acquire from the director something, or directors can acquire something from the company other than cash. Maybe director wants to give the service and company wants to give him the plot of land or building. Yes, when first you need to take a prior approval of the company in general meeting through a resolution, and in case the concerned director is also director of its holding company, you need to take approval from the holding company members also through a resolution. Okay, so this is the requirement of section 192. Thus, the reporting requirement under this clause has got two parts. Auditor has to report whether company has entered and have they complied with section 192. So how to know now? First leg is the reporting clause. For reporting on the first leg of the reporting clause, whether the company, first you take the representation from the management. Let them only tell you. Corroborate it with the appropriate evidence, because you know all the transactions, what is happening. And this transaction is a bit difficult because this could be out of the books. No entry only might have come. Scrutinize the following books of accounts, like records and documents that could provide the evidence. Persons connected with the director, check from form number MBP1, notice of interest filed by the director, and acquisition by or from the company from the register of loans, register of contracts, movement of the fixed asset register, minutes book, report on AGM. So these are all the sources gives evidence. Please mark it very important. They can ask you this question as a descriptive question only. From which all sources you will come to know that such type of transaction under section 192 must have happened. That means company must have acquired or company must have transferred. One, register of loans and guarantee security will give you. You must have taken a loan. Register of contracts with the related party, they would have made an entry. Fixed asset register would have changed. AGM, this matter would have got discussed. Further, management may have requested to provide details of its intention to enter into transaction under 192 after the date of financial statement. The minutes of the board of directors meeting has to be verified. Scrutinize the information of the subsequent period, okay, whether they provide any evidence about the intervention, because annual report has to be like AGM has to happen because they have to get one resolution. This way you check what happened subsequently, where the company has entered into or is to enter into any such contraction. Auditors would make a report to the effect under this clause. That means it is not that they should have entered into. Please keep note in mind. It is not that they should have entered into. They is to enter into any transaction also. That means would be transaction also you have to report here. Not the transaction which has actually happened. Okay. Now the second leg of the clause, whether the auditor has to check whether the compliance happened. He should obtain the prior approval for such arrangement in the resolution in the general meeting. The director concerned with the person, if he is the director of the holding company, then you need to get the approval from the general meeting of the holding company also. Auditor should check whether the notice of the meeting includes the particulars of the arrangement, and the value should be calculated by a registered value. Okay, so there are two elements. One, to see whether company has entered into or is going to enter into transaction, and whether they have complied with the provisions. So how do they come to know whether the company is going? First you ask the management, take their representation, verify various records. See, all these records will tell whether the company has entered or is entering. Second, you need to verify the AGM resolution, holding company resolution, notice of the general meeting, valuations. This will say whether they have complied with section 192. Okay, how should you report now? According to the information and explanations given to us. Beautiful, huh? Friends, please mark it very important. Please mark it very important. Very, 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 very important. Because my gut feeling says that this is important. Because they may ask you to draft one paragraph. See, generally we don't come across. The moment you come across in an isolation something like this, you can expect one draft. And they can build one story based on this. The CFO told this, okay, this data was not entered here. They wanted to enter, they have not yet entered. Now, auditor has got a reporting responsibility, yes. According to the information and explanations, okay, because if I go here, they say that whether the company has entered into cash transactions, and if so, whether the provisions of section 192 complied with. See, that's why there are two elements. First is whether have you entered or like to enter. Second, have you complied? So there are two components. So CFO can argue with you. Now, according to the information and explanations given to us, company has entered into a non-cash transaction with the director by acquisition of assets, assuming direct related liabilities, which in our opinion is covered under the provisions of section 192, and the approval has not yet been obtained in the general meeting of the company. So case can go like this, that they wanted to enter or they have entered, but they are not taken the approval. So you have to quote that this is the situation. Yes, RTP September 25. Hirsch Electronics is the manufacturing company. You see how they can ask you this question. Has to set up an R&D center on its 25th birthday anniversary. To expand the premises, they decided to acquire an adjacent plot of land owned by Reena, an executive director. Company offered to exchange one of its underutilized land parcels located in another industrial area rather than having cash transactions. So this particular sentence tells you that this is CARO, clause number 15, chapter number 7. You have freezed your mind now. Though the company's land was nearly twice the size of Reena's land, it was considered less commercially useful. So exchange was approved by the board of directors, but we require general body meeting approval, and a registered agreement was executed on January 2023. As an engagement partner, what additional audit procedures would you perform in respect of this land? You see whether the valuation has been done, because they are talking the commerciality is less useful. Who did this valuation? Because one of the requirement is you have to see whether the calculated by a registered valuer. It is not told in the CARO, but the guidance notes talks about it. Because this is how the people do the fraud. No, directors will transfer the land to themselves. Okay, what would be your report responsibility? Okay, so that means this RTP is based on above. So you understood now they will ask you. In the given case, you have to enter into transaction. Reena in return to acquire so and so. This transaction involves the directors Accordingly, auditor must evaluate the appropriateness of the transactions. The auditor is required to report as per clause number 15 whether they have complied, and section 192. Transaction is with the related party. Provisions of section 188 also has to be complied with the related party transaction being entered, and section 189. Okay, so this is compliance with section 177 and 188. Okay, so this is also coming under para number 13. Okay, somewhere we discussed and we said no, not important, no. Okay, but 1 mark it can fetch you. Somewhere we have seen just now related party transaction. We said not required, but in RTP we saw that there is one question. Okay, it is a related party transaction. So 1 mark 2 you are going to fetch just to tell clause number 13. And we have to see whether 177 and 188 has been complied. Okay. Discuss the reporting responsibility. In the financial year 24-25, 23-24, Candy decided to upgrade its registered office. As part of this upgrade, company sought to acquire adjacent plot of land owned by Siddhant, who is also director. So now you know the answer pattern. They may ask you the procedures, they may ask you the reporting, and the related party also will come into picture. Initially instant to sell, Siddhant was persuaded to transfer his property in exchange of the larger plot owned by Candy. Satisfied with the exchange, Siddhant agreed to transfer, and the exchange was formalized. So the registration of the property was completed on 31st December. So this answer is also in line with that. You can also explain clause number 15 and clause number 13, related party and so on. Okay, that's it. I hope it's clear, students. Yes, next is your NBFC. We have got a separate chapter only dedicated for NBFC. Clause number 16. Whether the company is required to be registered under section 45IA of the Reserve Bank of India. Okay, what is this concept? I will tell you in a nutshell because we are going to talk later also. So NBFC is the non-banking financial. That means it is doing financial transactions like lending loan, okay, except taking deposits and all. But it is not a banking institution registered under your Banking Regulation Act. Now it can so possible, students. There can be one company called MRPL. Now we all think that this MRPL is into the oil business. But behind the scene, it must be doing so much investments and all. It may be an investment company, who knows now? It may be giving loans to so many people. So how do you know them? That's why you have to apply one test. Is your 50% of the assets, because if I talk about an MRPL, more than 50% of the assets should have been what? You say, sir, it should be PPE because it's an oil business. But the moment you figure out that more than 50% of the assets are financial assets, like shares, bonds, debentures, investments. That means this MRPL, oil business is only just to namesake, to show, but behind the scene it is doing some other investment business. Okay, let us go to their P&L account. How much do you think, students? 50% of the revenue should come from where? It should have come from the sale of oil. But is it coming from the interest income, dividend income? That means this is clear cut. MRPL is an NBFC. So what is that? RBI has told, if you are an NBFC, you have to take a registration. So since auditor will access the books of accounts, he will clearly see how much percentage is coming from where. And it is possible that somebody must be into this investment activity, not registered as an NBFC. It's a violation. So you cannot do any NBFC activities without registering. So first you need to check, have you registered? Whether the company has conducted NBFC, non-banking financial or housing finance activities without a certificate of registration. Now there are different types of NBFCs. We will learn that later. One of the thing is housing finance activities. Now have you doing it without COR? Because you are non-banking only. See, the first one is not that. First one may be general company doing NBFC business. They have to get registered. The second is NBFC business only. Their full time is NBFC, but they have not taken the certificate. No, this is what you need to report. Whether the company is a core investment company, that means a full time, your job is to invest only. We will discuss about this later. As defined in the regulations made by RBI, continue to fulfill the criteria of CIC in case of company are exempted for registration, whether it continues to fulfill such criteria, and whether the group has got more than one core investment company as part of the group. Okay, so let us see one test your knowledge 10 question. Abhimanyu Finance Limited. See, the name itself says finance, like Bajaj Finance, NBFC, Manappuram Finance, NBFC is a non-banking finance company. So your mind will go to S, chapter number 14, unit number 2, and was in the business of accepting the deposits and giving loans to 2015. Company was having net owned funds of 115 crore and not having registration certificate from RBI. That means this is the second instance where you are an NBFC, but you don't have a certificate of registration. Company appointed Kabra as its chartered auditors, advised the reference to auditors procedures to be taken and reporting under CARE. Okay, then you understand this is chapter number 7. You have to talk about the procedures. The auditor has to verify whether you are registered and whether you are having certificate of registration. Now, what was the audit procedure? Auditor should examine the transactions of the company, activities are covered by RBI Act, whether the financial assets constitute more than 50% of the assets and 50 income from the financial assets constitute more than 50%. This is called a 50% test. This is what you need to test. Check the net owned funds, because they have given, if you want to register as a NBFC, you need to have net owned funds of 2 crore, 100 crore. They have given different slabs. Obtain the registration as an NBFC. If not, reasons has to be sought. The auditor should report incorporating the following: whether the registration is required under 45(a), has it obtained or has it not obtained. So this is what you need to tell. So in the instant case, net owned funds is 1.5 crore, which is less than 2 crore limit. Not having registration certificate, okay, and was also not having a certificate. So there are two non-compliances. First of all, you are less than what you are supposed to have, and second, you are not taken the permission from the RBI. So the auditor is required to report under clause number 16. I hope it's clear, students. A very general reading can help you. It is not a technical language here. Yes, clause number 17, cash losses. Whether the company has incurred any cash loss in the financial year or in the preceding financial year, state the amount of cash losses, because going concern. Because it will hint now. Okay, one more material uncertainty is here. Now, you have been appointed as a statutory auditor. See the January exam question. For financial year 24-25, company has paid up reserves and surplus of 2 crore, total borrowing of 9 crore, total revenue of 9 crore, excluding revenue of 2 crore from discontinued operations. You are required to state the additional matters to be specified as may be applicable. So, what type of company you are? Private limited company. Okay, it's not a public company. You are required to state the additional matter to be specified as applicable besides the report of section 143 of the Companies Act with regard to the following acts. Company incurred cash loss. See, this word cash loss you see only in CARE, nowhere else. So keyword. And financial year, it incurred 75 lakhs during the previous year with the negative working capital. Suppliers have reduced the credit period, while customers have delayed the payment. Few customers have declared to be insolvent. So going concern related thing. Company has been continuously in profit since inception. Because of the losses during the last 2 financial year, management suspected certain financial irregularities, fraud. Subsequently, fraud was discovered through the proper mechanism as being addressed by the management. You have informed of such case. So fraud reporting has to happen. Company has awarded certain projects in 23-24, metro lines, monorail and coastal roads, for which it had made a borrowing of 4 crore from a bank. And monorail is going project, but the coastal road project was yet to commence on the due date. Unspent 4 crore is the sanctioned for this project. Amount unspent is rupees 4 crore sanctioned for the project. Okay, deposit, loans and advances you have taken. Have you applied it? In case of an ongoing project of metro line, there was an unspent amount of 2 crores on 31st March. Is there any reporting responsibility for KYM Private Limited of CARO? So this gave you a very clear-cut picture. If no, how above matters should be dealt with your audit report for the year 24-25? Okay, first of all, you need to see the applicability of a CARO here, because it is a private company. Certain people have been exempt. Now, CARO 2020 is an additional reporting requirement. It is applicable unless specifically exempted. So, since you are a company, you are not a banking company, insurance company, Section 8 company, you are a private company, paid up capital and the reserves is 2 crore, borrowing is 9 crore, and which exceeds the exemption limit of 1 crore prescribed by the private companies. Accordingly, you will not fall under exemption and CARO becomes applicable to you. To tell you, your step mark will give you 1 mark. Because straight away they didn't ask you, tell about the CARO. First of all, is it applicable? Is there any reporting responsibility? Your answer is yes. There is a reporting responsibility. 1 mark you will get. In the given situation, so they see in the exam how they pull. If no, generally we know that. If yes, where and what. But if they say no, that means there can be certain elements which may not be requiring reporting. How do you address it? Okay, in the first situation, company incurred cash loss, 50 lakhs. Are you supposed to report it? Yes, clause number 17, we have to report it. Now, in respect of the fraud discovered by the management, are you supposed to report it? Yes, because it has been report, clause number 11, because it has been discovered, reported by the management, and auditor has to state whether the whistleblower complaints have been received, verified. Now, you obtained a term loans of 4 crore from Metropolis for the Metropolis Coastal Roads project from the banks. Coastal Road project has not been commenced and the loan remains unutilized. So, clause number 9, the auditor is required to report on the application of the term loans, whether the term loans have been used for the purpose for which has been taken, or is there any diversion happened. So, we say that no adverse reporting qualification is required. No adverse reporting or qualification is required, though explanatory statement is to be included indicating the non-utilization of the term loans. Okay, so here what happened? Now they are using it only, but it is unutilized now. Mere non-utilization due to non-commencement does not constitute the diversion. That means it is not called a diversion now. You are not utilized, it is there with you. So you can give it as a note. Subject to the adequate disclosure in the notes, opinion remains unmodified. That means you need not tell that. If they have already told in the notes to accounts, you can give a reference to the notes also. With regard to the Metropolis, Metro Lines and Metro Rail project, which are ongoing in nature, unspent amount of 2 crore represents normal timing difference in the execution of the contract. So again, similar situation, the auditor is required to report the application of the term loans for the intended purpose. Where the term loans are not fully utilized for the due to stage of execution, explanatory remark is required in the CARO report. Funds are intended to be applied, so CARO 2020 is required. Auditor is required to evaluate the entity ability to continue as a going concern as per 570, express the opinion on this, okay, report accordingly. Okay, this point 570 may be for this where you have got the subsequent cash losses and all, no, people are leaving. This is SA 570. Some student can explain, if no, from what? Okay, this particular portion you need not talk. Then that you can talk from the material uncertainty point of view. But what is that I wanted to tell you, students? You see here, no, they give impression as if it is not applicable and they want to confuse you that somewhere else only you have to deal. Okay, at least for me, first time I saw, generally what happened from the foundation, no, answer will be yes. If yes, then what? For the first time I saw that if no, where and how, but actually no was not applicable. I hope you got it. You understood? Yes. So clause number 18, resignation of the statutory auditor, where there has been any resignation of the statutory auditor during the year and you are that new incoming auditor. Have you considered the issue, objections and the concerns raised by the outgoing auditor? This is what you need to report. Yes, let's see. You are the appointed as a statutory auditor of SDA in place of CAT. Okay, now your mind may take you to professional ethics also, because communication with the previous auditor and all covered there. You found an order under section 148 of Income Tax Act where a tax of 50 lakhs was demanded owing to undisclosed cash sales of 150 lakhs. Now this is more like integrity of the management is in doubt, which was accepted by the company and applicable tax was paid by the company during 23-24. That means during your period of audit now. And this issue happened earlier now. Now, the company has not recorded such undisclosed income in their books of accounts during the year. On further, that means you have to report now undisclosed income. One clause was there, clause number 8. sorry, clause number 8. Yeah. Now, during the year, on the inquiry from the matter with the CAT, you came to know that CAT has resigned due to non-recording of such transaction only. Are Baba? Now you came to know that why he resigned, because of this issue only. Is there any reporting responsibility casted on you under CARO? Yes, you identified CARO, you understood chapter number 7. You saw the word resignation here and you saw the word undisclosed income. So you are going to tell, yes, clause number 7 talks about the surrender or undisclosed income, and clause number 18 talks about the resignation by the statutory auditor. So you write the story. In the given case, both the factor has to be reported. So clause 8 and 18 has to be reported. You are appointed as the statutory auditor following resignation of SM and Co. The SM and Co has certain concerns on the accounting matters leading to the change of the auditors. All the requirements under section 139 and 140 have been duly complied with regard to the resignation and the new appointment. During the course, it came to notice that survey has been conducted by the income tax department and unrecorded sales. So this is similar question. Okay, when this question did it come for exam? Yes, May 24 it came. That means this question was updated as a test your knowledge question in May 25. But MTP came in November 25. That means this question came first time independently in exam. Then it got updated in your study material and MTP, which had been made in the cash difference. Okay, they charged the gold from such collections and so and so. Company surrendered the disclosure. However, the company has not recorded. You want to report the about matter in the CARO. So this is the same question like the previous one. In fact, we can skip this because it's the same point. Okay, so you are going to talk about everything same, and you are going to report under clause number 8 and clause number 18. Okay. So now material uncertainty, going concern related. Based on the financial ratios, aging and expected date of realization of financial assets, financial liabilities and other information accompanying, does the auditor's knowledge about the board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists on the date of the auditor's report, that the company is capable to meeting its liability existing on the balance sheet date, as and when fully due when it is becoming due on the balance sheet date. Okay, so just they have to tell overall by looking at the ratios and all. So here they specifically tell like what you need to do. Look at the ratios, aging, realization of the assets, financial liabilities, knowledge of the board of directors and their plan. Okay, do you get a feel that there is a material uncertainty? It is not they are talking about the event. See, event happens, the management has to disclose. They have to tell there is uncertainty and all. So here, no event. See, that's the difference. If event would have happened, you would have seen in the auditor's report only. Why it should reflect here? But here, we are talking that, okay, no event happened, but looking at the financial ratios, what board of directors are doing, what is their strategic plans and all, what do you think? Is there any uncertainty? Okay, negative ratios are there. This is what you need to tell. Now, next is your unspent CSR money. Whether in respect of an ongoing project, the company has transferred unspent fund to Schedule 6. The fund specified in Schedule 6 of the company within a period of 6 months from the expiry of the financial year. Whether amount remaining unspent under subsection 5 of section 135 pursuant to ongoing project have been transferred to the special account in compliance with the provisions of section 6. Okay, what is this? Simple, they have to give spend 2% of their profits every year on the CSR activity. But sometimes no, they may end up constructing some school. The school may take 2 to 3 years to construct. So instead of spending this money locally as a revenue, that 2% you can start accumulating. Okay, so now you have say made a profit of 1000 crore, 2% will come to, okay, say 40 crores. Now 40 crores, no, you have to spend now, but you have laid only foundation. So there is the foundation has cost you 2 crore. 38 crores is still pending now in your hand. So what you need to do? Within 6 months from the financial year, you have to transfer to some fund. This is what they are telling, which is ongoing project. Okay, they have to create one special account. That means they have to transfer this to a special bank account. And from then they should start spending this money. But if it is not an ongoing activity, like I don't have any such capex projects, okay, but 40 crores I have to spend, I don't know how to spend it now. Out of 48 crores I have spent, still, or I can 20 crores I have spent, still 20 is in my hand now. I don't know where to spend. All local drinking water, Swachhata Abhiyan, and all those things we have done. Now, where to spend this balance 20? I don't know. So, what your Companies Act says, Schedule 6 lists certain fund. You say within 6 months you have to transfer to the fund. So, primarily, when you talk about a CSR, whatever that 2% you keep, if you spend it, then this is not applicable. But if it's unspent, now one question comes, is it a revenue or is it a capex? If it's the revenue, you should transfer that balance money to some fund which is told in Schedule 7 of the Companies Act within 6 months from the expiry. If it is capex, that means you are going to spend next year. So transfer to your personal account only, but it should be a very special account. It should not be your normal current account. And the last one, what you have got is a consolidation. Where, and first of all, for consolidated financial statement, CARO is not applicable except this. This is the only clause applicable. Where there has been any qualification or adverse remark by the respective auditors of the companies or CARO. If yes, indicate the details and the paragraph numbers of the CARO report containing qualification. Okay. So for consolidated financial statements, CARO is not applicable because CARO is applicable at the item level. Consolidation, what you do? You simply take their balance sheets and prepare one consolidated balance sheet. But there is a clause number 21 which says that if in the respective subsidiaries balance sheet, if there is an adverse remark, that has to be compiled along with the para number, which, and you have to give that as a reporting under CARO. So let us see the one exam question which is come here. AZ Industries is an Indian pharmaceutical company having corporate office in Mumbai. Okay, some story about the AZ Industries. In pursuit of the research and development drive of their core product portfolio, KK Limited, which is 100% subsidiary, and OP Limited, which is a joint control entity, it's called joint venture, were amalgamated with the AZ Industries. Okay, so merger happened. PPP Associates Chartered Accountants are the principal auditors of the company. The auditor of KK and OP was conducted by the respective component auditors. So now you think it must be SA 299? No, this must be SA 600 because this is not a branch here. Okay, we are talking. Okay, it's not a. Okay, we can apply here. SA 6 is not a joint audit. It is the report of the component auditor. Now, the consolidated financial statement of AZ Industries consists of financial statement and financial information of both the companies to whom CARO is applicable. So, from this you understand, no, it is not 600, it is Chapter 7 CARO. The auditors of said companies have given their qualifications for the CARO. In respect of wholly owned subsidiary KK, auditor qualified clause number 15. Company did not comply with section 192. OP, they have made an adverse remark with regard to clause number 9. Company has defaulted in loan payment or repayment to the bankers. In respect of AZ Industries, the principal debtor auditor has given adverse remark in the standalone statement in respect of clause number 31C, fixed asset related, that title deeds are in somebody's name. Engagement partner is in the process of finalization of consolidated audit report guide. How we will report on the matter stated above. Okay, so you need to tell that CARO is not applicable for CFS except clause number 21. So he has to report it. Clause number 21 says that if, and you have to tell now what is that clause number 21 says. You have to report whether they have been in qualification, including the para number you have to say. So in the given case, you can write the story. Reporting is applicable because you are preparing the CFS, and that only clause number 21 is applicable. So your reporting goes like this. You have to tell the name of the company. What is their status like? Are they holding company, joint ventures, or subsidiary? And which clause number they have defaulted. Okay, so you have to tell what included in the, if yes, indicate the details of the companies. So you indicate the details of the company. Paragraph numbers for which the qualification is there. And when you talk about the detail, you should know what they are. Is it a holding company or subsidiary company? That you will have to tell. Yes, reporting on fraud we have already discussed. Yes, on reporting of ICFR and all, we don't have the question. And if you have given any adverse remark for any of the clauses, then auditor has to state the reason as per clause number 4. Okay, just like this is called a basis. for opinion. If you are going to give any qualified opinion, you have to give the basis for the opinion also. Okay, students, so we are done with the reporting, and now they have given some illustrative audit reports. Okay, so what we will do, quickly we will go through. At least once you have seen, no, they can ask a question, one case study based on the one of the report. Okay, so it is your choice now. Afterwards, you want to read it or not. But I wish you pay full attention now. This one reading now will put something in your brain now. At least you understand. Okay, just give me 1 minute break. You can drink some water and all. You can start in 1 minute. I will finish this. Yes, so here, what we will do, we will quickly go through some illustrative audit reports. And my purpose here is to look for, see, we know the structure of any audit report now. Okay, and we need not talk about it. What is that speciality here? See how the languages have come. Okay, we'll quickly go through. The first is talking about one emphasis of matter para, because somewhere they told when it emphasis came, no, please refer illustrative audit reports, because in the examination they can ask you to draft the para. So you may have to write the similar para. So you can make a note wherever important, no, just make a note. Next time when you revise, no, just read that part only instead of reading everything. Okay, so emphasis of matter paragraph, how do you report it? First, independent auditors report, heading, addressee, opinion. Okay, opinion will have, we have audited, because this must be a clean opinion. You have identified the financial statements, you have identified the components, you have identified the name of the entity, you have identified the period, notes to account, 5 elements are required. In our opinion, gives a true and fair view. This must be the fair presentation framework as per the Companies Act of the balance sheet and the P&L and the cash flow as per the accounting principles. Now, what is the basis of opinion? One, we have conducted audit as per the standards. Responsibilities are told there in the auditor's responsibility section. We are independent. We have obtained sufficient appropriate evidence. Okay. We draw your attention to note number 10 and describe the effect of a fire in the company's production facilities. Our opinion is not met. So they can give one case where fire happens and say draft one para. So your job is simply, we draw your attention to note number so and so, which describes about the fire. This is very fundamental. You can write your own story, but very importantly, our opinion is not modified. Okay, key audit matter, other things we need not see here. Responsibility of the management, report on regulatory requirement. Okay, auditor's responsibility section, they didn't write here. Okay, they wrote here. Okay, and name, registration number, UDIN number, and everything. Okay, so this is one thing. If you want to go through, just make a mark here. This is what you need to see next time, because they can ask one case study based on this. Now, second illustration is an emphasis of matter. What happened here? ABC Limited is being transferred by way of slump sale to another newly incorporated subsidiary company called XYZ Private Limited. Okay, which is your Indian branch of one of the foreign companies. Somewhere we had something like this. You remember, no, going concern related one case study in the exam question RTP or MTP they asked. There was one foreign company, it had a branch in Delhi. So it created another subsidiary, so transferred this to another subsidiary. You remember, no? You please go and check. That's the reason we are reading it. Now, what note the management gave in the financial statement? So they said that ABC, during the year, ABC Limited has entered into a business transfer agreement with XYZ Private Limited. Okay, just give me 1 minute. I'll just check here. Business transfer agreement. I searched. No, we had no one foreign company. I'm not recollecting the question number. See this. Test your knowledge 14, which was asked in May 24 exam. Read this story. They have prepared the financial statement on the going concern basis. Draft the suitable opinion paragraph. Now, see, students, one thing is, I say maybe knowing that, okay, the students may not read these illustrations. And you see, no, this question they have asked. So if you are just to read it, at least you should have tried to from where it has come. You see, the same story. What we have seen the story here. Every story has been picked from this. Indian branch prepared on a continue, does not continue to on a going concern, does not continue Indian branch that does not continue on a going concern. Okay, then what they ask, draft the opinion paragraph along with the disclosure, note number 10, 20. Is it note number 20? Okay, whatever. Now, drafting of the opinion paragraph. Okay, so independent auditors report, we have audited. So just you have to give the opinion and the basis of opinion and one emphasis of matter. So where you tell the Delhi branch does not continue, because we discussed this, that there is no issue of going concern now, because they have followed liquidation accounting. That means you have to give clean opinion. And you see students here, yes, to the members, clean opinion, basis of opinion, we have conducted the audit, emphasis of matter. See, we draw your note attention to so and so, opinion is not modified. We draw your attention to note number 20. Did you see? This is from exam. Like this, what I want you to do, find out the gem questions which they could have asked. Otherwise, nobody will read it, first of all. And I say we'll ask from here only. That one screenshot they gave, NP of the bank. They know students won't read it from that screenshot. And it is not legitimate, like it is not very clearly visible also. It will takes more efforts to write or read it. But they will ask you from there. Okay. So because once you figure out the risk, yes, you are well prepared. And the moment you are prepared, and I already explained you, your chances of success will go to 60 to 80%. Beautiful. That means CA is not an uncertainty, it is just a risk. Risk has to be addressed with the internal controls, preparation. It should be right set of preparation. What type of preparation? Risk-based preparation, because you cannot remember everything now. That's why once you have gone through, you have to figure out like where you miss, where you cannot explain on your own, which skill you have to develop. Should you improve memorization or writing? These are all you have to figure out. Word is complex, not so easy. Don't go with the marathon lectures or somebody coming in YouTube and telling 70 marks you can score in 10 hours or 10 days and all. It may work for someone, not for everyone. Okay, each person independent. That's why in my video, no, you see on my head, above my head, what is there? I always say, know yourself. First, know who you are, who you were. Anyhow, so good to see that there is one question here. Now, qualified opinion, relevant notes given by the management. So please mark this. So they requested the confirmation from the key vendors for write back of the liability. That means there were vendors of 2 crore. And management told we have not, they are not claiming, we will write back and we will claim it as an income. Vendor account debit to income account. Okay, management has, and they explain, this is in the notes to accounts. Relevant notes in the balance financial statement. Management has undertaken the detailed assessment, so and so, so and so. So they have paid to the project managers. So this, during the year, advance of so and so amount has been paid to the project manager. This is the write back, this is income. This is the income. And this is the advance they have given to the project managers on account of travel and all. And 1.75 crores is the total amount, out of which 1.1 is confirmed, 0.65 is not confirmed. And they have made the provision and has provided the balance amount of 1.4 as a provision for, okay, they have provided only 1.65 and 1.1 crore they have made a provision for it out of 1.75 crores. So management is confident that expenditure is incurred for the business operation. So how do you give the qualified opinion? We have audited, same story. Subject to it, the financial statement show true and fair view. Okay, now in the basis you say, look at the note number so and so. Confirmation from the key vendors are pending. Okay, we don't know. So we are not able to express any opinion on 2 crore rupees. See, you have quantified it. Second, we are also inviting your attention to so and so note. Okay, and you explain the story here. We strongly recommend that management should undertake this transaction through banking channels, because all the advances you are paying in cash. So we cannot ensure the completeness of the expense at the end of the year. 1.75 crores and all they are telling, we don't know whether it is complete or not. Okay, whether the provision is sufficient or not, whether have they really paid or not, because everything is happening through cash. Okay, so this is how you can write. Yeah, this particular thing, please note it, because this is your priority 1. They can ask you based on this. Now, another type of illustrative questions they have given. So they have given 4 type of illustrations. Now, auditor reporting on non-corporate entity. Okay, our priority will come little less under general purpose statement, compliance framework. Okay, Based on this, your wordings are going to change, friends, if at all. So for me, it is the third priority. But at least once we understand how they are telling, what they are trying to tell. First of all, there is a non-corporate entity. That means it is not a company. It is not an LLP. So how it must be a partnership firm. How you must have prepared the financial statement as per the generally accepted accounting practices, because Ind AS and all not applicable to them. General purpose, that means it is given to different people. Compliance framework. So don't use the word true and fair. You say complying in all material respects. This is what you need to say. You get 1 mark. Otherwise, if you say the word true and fair, you lose the marks because it's a compliance framework, not a fair presentation framework. Now, what type of audit? Complete set. So when you say we have audited, since they use the word it is complete set, you have to tell balance sheet, P&L, cash flow statement, notes to accounts. They say it is not a group audit. So don't tell about the segregation of responsibility and all. It is for the wide range of users. That means it is a general purpose framework and not a fair presentation framework. That means it is a compliance framework. So accordingly, your language and the phrases will change. There is an unmodified opinion. That means clean opinion you have to give. No material uncertainty exists. That means SA 570, you need not talk about it. Management has accepted their responsibility to give the information, whatever. Ethical requirements are applied. That means you need to talk about ICA code of ethics when you speak about independence. Responsible for oversight is going to differ from the management. So when you write the heading, the responsibility of the management and the TCW you have to write. Auditor has got no other reporting responsibility. So that reporting responsibility won't come. So you talk about we have audited the financial statement. Give dummy names and all. Balance sheet, P&L. See, why? Because it's complete set. In our opinion, they are prepared in all material respects. Why? Compliance framework. We have conducted the audit. Code of ethics, you say, responsibility, 4 element. Responsibility of the management and the TCWG, because TCWG are different. Auditor's responsibility, they will not ask you. So what is audit, how is audit and all. You can write, identify as so all the story, what you communicated. Okay. The second illustration. What if you would have given qualified opinion due to some misstatement? Okay. Let us take the example of a complete set. That means you have to write the same story, balance sheet, P&L, cash flow. It's a fair presentation framework. Now you say, except for the matter, it is true and fair. As per the accounting standard, because this is a company of audit, management responsibilities are reflected in the financial statement as per 210. Inventories are misstated. The misstatement is deemed to be material but not pervasive. That means you have to give qualified opinion. Ethical requirement is code of ethics, no uncertainty. Key audit matters are not communicated, have been communicated. Okay. So first you start with the qualified opinion. We have audited. So you are going to identify this component. True and fair, you are going to say. Here you are going to write the story that inventory valuation was wrong, lower or cost or NRV, they are not done. Okay, but please note this, please mark it, very important. When you are telling that inventory value is not proper, you should tell amount of rupees so and so have to be written off from the inventory. Because of this, the cost of sales also will be increased. Income tax will be reduced by so and so respectively. Now students, for this, now you have to go to FR. FR, you have got this thing like how to do the calculations in, I think, changes in the accounting policies and the estimates. Okay, or somewhere, yeah, somewhere there, no? In that chapter, you come across this. You have to do the calculation. That means if your inventory has gone down, what is the effect on the profit? What is the effect on the tax? What is the effect on the investor's income? So you have to show it respectively. So please practice this particular path. This is what something I find. Okay, previous things you ignore. So we have found 2 gems which they can ask you in the exam. Other things you ignore. Okay, so we are not going to get into other things. Okay, one is that cash related, that vendor write back, cash related advances. Second, inventory misstatement, because his basis for opinion was bit different. Because in the examination question, they can give these numbers to you. So you have to tell, this is how it is impact. Now you are going to give a disclaimer of opinion, complete set, fair presentation, accounting standards, management responsibility, unable to obtain the evidence due to some reason. Okay, so limitation of the description, scope oversight. Okay, let's see. Since you are talking about disclaimer, very importantly, we should say 1, we are engaged to audit. Entity name, complete set financial statement you have to tell. Second, we do not express any opinion because of the significance of the matter, because we are not able to obtain the evidence. This is what you need to tell. In the basis, we were not appointed as an auditor till 31st March. Okay, our appointment was late, because of which physical inventory count we were not able to figure out. New computerized accounting system came, so many errors, okay, unable to determine the adjustments. So that means this is a pervasive problem in this organization. So this is the reason we are not able to tell. We are unable to determine whether adjustments will be required. That means financial impact I am not able to tell. That's why they told, if you cannot tell, you have to tell that. Now auditor's responsibility, our responsibility is to conduct the audit. Because of the matters, we were not able to obtain the evidence, and we are the independent. Only 3 things you need to tell in the responsibility section. Rest everything will remain the same. That's why they didn't tell you here. Management responsibility will be same. Key audit matter will not be given. Okay, so no, they don't have any other thing, and reporting responsibility will remain the same. So only what all the changes, no, that only they have given here. I think it's fine. We will move on. So another is a key audit matter. And okay, report that includes key audit matter section, emphasis of matter and other matter, same as first illustration. Okay, so we can skip it, we can move further, because we are talking about the complete set, fair presentation, accounting standard. Where you quote accounting standard, students? Where you are quoting accounting standard? When you say, okay, I'll just show you in this example only, where you will tell accounting standard in the opinion para. When you say this is in accordance with what? Accounting standard. Management responsibility, unmodified opinion, code of ethics, material uncertainty do not exist. Okay, the fire occurred between the date of the report and there was a fire. Matter of such importance that it is fundamental to the user's understanding. So you are going to give emphasis of matter. Okay. Corresponding figures are presented, and auditor is not prohibited by the law. Predecessors audited by a predecessor auditor. So when you have got an audit done by a predecessor auditor, in other matter paragraph you have to tell what is that 3 things. Who was the predecessor? That audit has been done by a predecessor auditor. What was the opinion they expressed, and what is the date of that report? So please note, this is one thing they may be expecting. Okay, so the responsibility, TCWG and management are different. Okay, first of all, we have audited the financial statement. You can identify the entity and so and so, so and so. In our opinion, true and fair view, according to the accounting standards, you can say, instead of generally accepted principles, you can say accounting standards. Now, basis, we are done audit as per the standards. Okay, there's 4 elements. We draw your attention to note number so, effect of a fire. Okay, so this can be an examination question. So why you have qualified it? Oh, sorry, why you are emphasizing it? How you are emphasizing? This can be a question, and this is your emphasis. Same as first illustration. Okay, there is nothing here. Qualified opinion due to departure from the applicable reporting framework and includes an emphasis of matter. Okay, that means you have departed from the framework, means material misstatement, and you have including an emphasis. Now, what is the departure? We will see complete set, accounting standard, management responsibility, fair presentation, departure from the framework. So you only can assume wrong capitalization. Okay, there is no material uncertainty, and this is that departure. Fire happened in the entity's premises, which was disclosed as a, okay, this is not a departure, this is an emphasis of matter. Matter did not require significant auditor attention, so that is why this is not key audit matter, but it is the fundamental to them, that's the emphasis of matter. So, qualified opinion we have audited in our opinion except for so and so. So, company's short-term marketable securities, please mark it, priority 1. So, this is the third thing you are finding. Because this they can give you as a case and say what type of opinion auditor is going to express. They can give you like this. Companies short-term marketable securities are carried in the balance sheet which are not marked these securities to market. What do you mean by mark to market? That means you have purchased some values. At the end of the year, you have to find out fair value. And fair value minus book value is called mark to market. That means you have marked the value to the market value. And instead of them, they have shown it a cost only. This is a very clear departure from the accounting standard. So, if the company would have recognized unrecognized loss of rupees so and so, they should have recognized. Because of this, the carrying amount will be get reduced. Income tax and net income is going to be reduced. by so and so. So this is the priority one question. If you have learned this question properly, same theory you will apply to that particular inventory related issue also. So learn how to answer, how to draft one paragraph. So please mark it important, students. They can ask you question. They can write this story only, that this security happened, mark to market was not done. What type of opinion you will express? You say, I'm going to express a qualified opinion. Draft one para. So first you will draft this para. This will fetch only 1 mark. But this may fetch you majority marks. And this can be having a component, because they expect you to tell its impact also. How much is income tax increased? How much? Because they can give you one percentage also. Who knows what they will tell? And how much it has been reduced by, so it has impacted the wealth of the investors. Now, emphasis of matter, effect of a fire, company's production facilities. Okay, similar thing. Yes, I hope students you have understood. So see, we have at least gone through, and in this all this illustration, actually, if we would have been doing it for the first time, we would have found 4 gem reports where they were different, like that foreign company going to some bank branch. Okay, but out of this already 1 questions come for the exam, so other 3 questions can come for you. Yes, thank you very much. With this we are done completely with the chapter number 7.